Hello and welcome to yet another session. And in this particular session, we are going to look at gold overview or analysis of gold, what you're anticipating. And let's begin by looking at the data that we are looking for today, the core PPI and the PPI monthly. That is expected to come out today. As you can see, the projection core PPI monthly, they're projecting an increase from negative 0.1% to 0.2%. And the core, the PPI monthly, they're projecting from negative 0.1% to 0.3%. And then now we have the retail, the core retail sales and the retail sales as well. So this is quite a crucial data here. Somehow, if it comes, the PPI comes as it's projected, what it means is that we are likely to witness maybe an increment in the CPI. But again, the key thing is to look at the actual vis-a-vis the forecasted figure, and that's what is traded as the surprise effect. And that's what causes the market to spike. But later on, when the market cools down, you can now be able to look at the previous vis-a-vis the actual. All right. So I know when it comes to fundamentals, right now we are at par in terms of trading fundamentals. Those who don't have any clue in terms of how to trade fundamentals, you can check the videos in the YouTube channel about fundamental analysis. I believe I have been able to share quite some nuggets that can help you navigate through how to trade the fundamentals effectively or successfully. Nevertheless, if maybe probably you're very new into trading, then please note that during the fundamentals we have very high volatility, and maybe it's time you can stay aside in the markets or just trade in your demo account, so that you might avoid losing money unnecessarily, right? So that's what we are looking for today, and I think that's the data for the US this week. I don't think we have any other data apart from the unemployment claims tomorrow at 4:30, right? So let's look at the dollar index. So what you are seeing here, the dollar index is very much under pressure. We are seeing consolidation of prices here because the dollar index is very much under pressure because of the Fed rate cut bets, which are undermining this particular asset, the dollar index, right? So because you've been able to see low chances of a Fed rate cut, right? The chances for a Fed rate cut are really becoming minimal. And as you can see here, the dollar index is now stagnated at around this particular point. So what we are seeing here is a bit of consolidation. So I am looking at a potential rejection of price from this particular level, maybe pushing on the downside. So something like that, right? The price are pushing on the downside. So that's what I'm really looking at. But just in case we see the price being bullish, therefore, a break above this level will mean that now we'll be retest that level, and higher chances, and we are going to see the price pushing on the upper direction, right? So that's basically what I'm looking at the dollar index. That is the daily time frame. If you look at the 4-hour time frame, what we are seeing also here is some bit of a consolidation. So the reason why we are talking about rejection from this particular level, if you look at this level, price has rejected here severally, and and with the type of candlesticks forming here, no momentum, consolidation. So it can either break on either side, pushing on the downside, or maybe on the upper direction. But when we come to the 4-hour time frame, what are we seeing on the 4-hour time frame? So we can be able to see different perspective here on the 4-hour time frame. The first thing that we can be able to see, this kind of consolidation here. All right, so basically we have it like that, and with this an uptrend, and then the price consolidating in this particular manner, we anticipate a breakout of the upper direction. That is the continuation of the uptrend, right? So the reason I'm saying it's really important to monitor how the price reacts on this particular level. Maybe probably the PPI data and the core retail data, which is coming out at the same time, might give us some cues in terms terms of where the price is likely to go, or we might see the price break on the upper direction, on the lower direction. Because with this kind of data, 4 sets of data coming out at the same time, we might be able to see some mixed sentiments here, mixed data, the market reacting in both sides. All right, so let's monitor that and see what is really going to happen. Okay, so the dollar index right now is very critical in terms of giving us some cues where the price is likely to go. Because if you look at it, yes, it's within the 100 levels, but we can see a lot of stagnation, and especially this might continue now that we have very key data, the PPI release and also the core retail release. We might be able to see some consolidation continue for some time until now after the data, when the price is going to react to the data, right? So let's approach that cautiously. And finally, let's look at the dollar. So I mean gold. So gold is really pushing quite well. I remember yesterday when I did this analysis, we talked about this entry here, the price targeting these Asian highs. So the Asian highs were taken out, right? So giving us some cues that the price is likely to push on the upper direction. And yeah, here we are. So if you look at it, even at this particular point during the New York session, we have a very nice entry, right? We have a very nice entry. You can use the Fibonacci from this to this high, and you can see the price came to that particular point. So a very nice entry. Nevertheless, you can also use the OB. All right, you can use the OB. So this is the OB, the order block there. After the price has given us this particular retracement here, right? I mean, after the price has given us these BOS here, so the price retraces again during the New York kill zone, and now we see the price push higher. So this was a very good entry, right, for buys, a very nice entry. So this being the order block that caused the entry here, therefore the target should be, if you entered here, the target should be these highs. They have been taken out very nicely. All right, so we can see that. So we are looking at the bullish sentiments here. If you look at it from the daily time frame, yesterday the price were very bearish. All right, you can see the price were very bullish, I mean. So we see price pushing up. Remember, we had these bullish wedge, right, or the peanut here, which we said once the price breaks above this, then we are likely to see more bullish prices. A break above this, you are likely to see more bullish prices. And we said with this kind of a pattern, higher chances that we might be able to see the price break on the upper direction. Okay, so let's monitor that. And with this pattern, of course, a breakout of that will lead us to targeting these liquidity levels here. Right, we have the buy side liquidities here, so that's where we'll be looking at buy side liquidity. I'll be targeting the prices maybe probably to go to that particular level. But first, we have to see a break above this particular point. Remember, if you look at what is really happening here, we have that, we have that, we have that, and we have that. So higher chances we might see the price complete that W pattern. And here, if you come to the 4-hour time frame, I mean, or even before we go to the 4-hour time frame, I will be monitoring this particular level, the neckline, how this 4-hour candle is going to close. If it closes above that point, I mean this daily candle, if it closes that today's candle closes above this level, then it will confirm that W pattern, and we'll be looking at probably a retracement to these OB. That will be an OB, or maybe probably even the way it is like an engulfing, bullish engulfing for a probable entry, right? So on the 4-hour time frame, if you look at it, it's best to wait for this 4-hour candlestick to close about 6 minutes or so from the time I'm recording this. And then now after that, we need to now maybe probably look at potential entry. So if I look at this particular level, let me delete that. So this should be our weekly OB, right? This should be a 4-hour OB. I mean, the entire of that level should be a 4-hour OB. Then you come to the 1 hour, and the key thing on the 1 hour is basically to minimize the risk. So we can have it. I know this is the 1 hour will be yes, right? So quite a bit high risk. So we go to the 15 minutes time frame, right? But even before we go to the 15 minutes time frame, if you look at the 1 hour time frame, we are seeing the bullishness coming into play, right? We are seeing the bullishness coming into play. So what we'll be targeting first of all will be, we have this zone, right? Let me make this clear. We have this zone. This is an order block because of that POS there, and also this is also an order block, right? This is also an order block. So when we have two order blocks, I always say that maybe sometimes you can take trades here, but with less risk. If you risk 2%, maybe this time around you can consider risking 1% or 0.5%. Okay, so because you realize that there are chances that the price can push all the way even to this level because they are very close to each other. If you look at the number of pips from this level, let's see, to that level, yeah, they think it's quite tradable. So we can come to the 15 minutes time frame and now try to align. So on the 15 minutes time frame, we will be having this level here, right? That will be our OB there on the 15 minutes time frame. Okay, so in case the price retraces to this level, this was yesterday's price action. In case we see the price retrace to this level, we can have it there, the OB. In case the price retraces to this level, then we will be looking at potential buying opportunities around 40-50 there about. Okay, but see what the price is doing. It's looking very bullish, right, at the moment. So I'll also be looking at this. It has created a BOS there. That is the recent one. And then we have this as the OB. I know we still have an engulfing here, bullish engulfing. So when we come to the 5 minutes time frame, therefore we can minimize that like that. And this will be a very key level in terms of looking at some buying opportunities. So in case the price retraces, because you have seen the price opening here, right? So this is the opening price. The price has pushed down, so manipulation. This, if you're buying around this level, then this should be the manipulation, and therefore in the London session, we want to see a retracement to these levels, so that we can be able to take the trade. If you use the Fibonacci retracement and extension, so you can see it's around this level that we have these three consecutive buy candles. All right, so let's monitor what the price is going to do. So it's gold is really aligning itself because you're seeing buyers being attracted here, or buyers coming into play. This should be the second day consecutively, and I think this is also as a result of the dollar index being undermined so much by the reduction of by the lowering bets of the Fed cutting the rates, right? So I think now what will shape the prices of gold is what traders are really looking at is the key US macro releases for some insightful ways how the price is likely to push, and therefore, especially now the core retail sales and also the PPI data that we are anticipating today. So that will be very significant in terms of shaping how the markets are going to react. Of course, it's a dollar news, so they are going to affect gold, right? So let's see what happens, and maybe probably we'll have another recap during our live market analysis. So make sure to join the same. So with that, ladies and gentlemen, have a wonderful time. I wish you a blessed Tuesday, a peaceful Tuesday. Always remember to be disciplined, to be focused, and to always trade with purpose.